But first, want to dig into the market action here, tied back to fears around production costs and potential overheating concerns when we dig into the latest data out from May's Manufacturing Purchasing Managers Index, coming in a bit above what we saw in April. The reading 62.1 up from 60.5 in the month of April. Keep in mind, readings above 50 indicate expansion, and no doubt at this point in the recovery, expansion to be expected. But the longest delivery times that we've seen since 1974, speaking more to issues around supply concerns, shortages that we continue to hear about from companies out there now, including the likes of Tesla, and input prices rising to the highest reading that we've seen since July 2008. So for more on what that means for the market action ahead, I want to bring on Josh Kutin, Columbia Threadneedle Investments North America Head of Asset Allocation, joins us right now. And Josh, I mean, when we look into it, the inflation concern is obviously going to be here for a while. Friday's big jobs report going to be important to see where we're at in the recovery. But what do you make of those numbers and what we're seeing play out here to kick off June?
Great. Well, first of all, thank you so much for having me here today. We don't tend to sweat some of the individual economic releases quite as much. I think if I had to distill the market to three key themes right now, they would be momentum or trend, volatility, and valuation. And those are really been the guiding forces of a lot of our asset allocation decisions at the moment. So momentum and trend have been positive for now going on a year with a couple of minor blips. Volatility has had some fits and starts, but right now remains relatively low. And it's really that valuation metric, which we continue to be a little bit worried about in the sense that it keeps us from being in a maximum overweight type of a territory. So right now, I'm a little bit more focused on some of those key metrics as I think about the markets overall. Not only do these ideas really guide kind of our tactical positioning, but even we have some experience building some rules-based systems for making decisions across different asset classes. We have an adaptive market state right now, which despite that strong momentum and that strong low volatility indicator, remains in a neutral market territory just on the basis of how toppy markets do appear.
I mean, when you pair kind of the trends with the underlying fundamentals and valuation, I mean, what looks most attractive to you here? Because today's standout would be energy, as we see oil prices continue to surge there. That sector by far the strongest performer here, up more than 3%. I mean, what's your take on energy and how much higher we could see oil prices go if the underlying data here seems to indicate all systems are go and those underlying prices for commodities continue to be hot? How would you play it?
This whole idea, even more broadly than energy, just as you're saying right now, this whole broad idea of inflation thematic assets has been a really critical story this year. It's one that we think continues to have some potential for upside. So commodities overall, we think is a very strong asset class to explore at the moment for a portfolio. It's historically added diversification, and it's something which a lot of various asset allocation professionals have favored, although it's been a little bit of a disappointment over the last, call it 10 years or so prior to this year, particularly with that negative period in late 2014 to early 2016. And finally now, since the end of 2020, we're seeing that long-awaited advantage to having commodities in a portfolio, and something we believe will continue. And beyond that, some other inflation thematic asset classes, REITs, for example, have generally been keeping track with commodities and outperforming broad equity indices over the course of this year. Even within the fixed income complex, ideas such as inflation-linked bonds, the TIPS have done better than straight up nominal. So we broadly believe that in an asset allocation standpoint, investors should have exposure to these various inflation thematic assets at the moment.
Yeah, year to date, energy up 37% on a sector by sector basis, almost outperforming the index 4-1. Impressive there. When we look at maybe the inflation concerns, though, as you see it, obviously the Friday jobs report going to be important, and maybe the storyline as the Fed continues to watch and be accommodative in the recovery for all pieces of the labor market here. But how important might that be to the inflation concerns we've been watching and people thinking that the Fed is going to have their hand forced to come off their accommodative stance sooner rather than later? I mean, what are you expecting to see in that report, and how should investors be bracing for it?
Yeah, I believe that the Fed is looking at obviously all the same different reports that we're looking at, and they're not going to do anything that we think is going to be irresponsible at all. So I do believe overall a lot of the fears of inflation that are going on in the markets right now are more than necessary, and investors have just been a little bit more fearful than necessary at the time. That said, we have experienced some pretty serious reactions to it. Even that big CPI print that we saw a couple of weeks ago did surprise investors. And if we see something similar like that in that jobs report, that could create a little bit of a short-term blip. One of the things that we're tracking very carefully right now also is the correlation. It's a word I'm not always supposed to use, but correlation is an important word, that linkage between stocks and bonds, to the extent that treasuries for the last 25 years or so have been a very important defensive flight to quality asset when compared to equities. And over the course of recent months, what we've seen is this tick up of correlation between stocks and bonds on these fears of inflation. And that's something which makes our lives more challenging as asset allocators.
All right, Josh Kutin, Columbia Threadneedle Investments North America Head of Asset Allocation. Appreciate you taking the time here to chat. Thanks again.